Good afternoon, ladies and gentlemen, and welcome to this afternoon's live trading session and also trade review session. So, as you'll all know from the week has been has not been the best. I think that's probably the understatement of the week. Lots of over trading, lots of early in the early part of the week. There were a lot of missed profit levels that I think affected the way that I approached the market, but more so than ever I think that there was a degree of over trading every single day, probably with the exception of today, getting too overexposed in terms of the direction of the market. So as well as being wrong, had too large a position on, which obviously accelerated the downside fairly quickly. So we're looking at a fairly substantial loss for the week in terms of pips. A couple of the larger trades that I did yesterday, both gold and Dow, late on, the last two trades I think that I did, are both returning decent profits. They were 3.2 times the size of a normal trade, so that does something or a little bit towards reducing the overall loss for the week, but it is clearly going to be a negative week, and something that I need to address going forward. Obviously a fairly spectacular 12 or 13 week period, which the one thing about good runs that you can always guarantee is that they come to an end. I would have preferred the end to be less harsh than it has been this week. Gold continues to fall. Gold currently trading 1741 and change, so could very easily have taken profit of 100 pips on the gold trade last night. I didn't. I thought that it might have fallen a little bit further during the Asian trading session, and it's back there and it's challenging those levels. I think all that's happened around the Fed and with other news this week, the dollar movements yesterday, there's a lot of talk out there about where gold can go to, and I think the overarching position or opinion is that it's going lower. Some of the people that I follow regularly in relation to gold, one of them is calling it as low as 1600, which is about $150 from where we currently are. I think they call it a little bit lower than 1600. I think it's 1570, which is obviously a significant move from these levels. I don't quite see that, but I think we're very much in a bearish phase with gold now. I certainly see this market going down and testing 1700. Being Friday today, weekend ahead of us, I wouldn't want to be holding gold, so I think that we're going to see more pressure during the course of the afternoon. I'm trying to keep my hands, or I'm trying to sit on my hands and not to take too many trades, but I would like to be short gold going into the remainder of today. So I do have a limit order up there at 1745 that I hope triggers. If it doesn't trigger in the first 15 minutes after the opening bell here in New York, then I will probably be a bit more aggressive and sell into the market at the levels that we're currently trading. As always, we're about 4 or 5 minutes, well, probably less than that now, 3 to 5 minutes away from the opening bell in New York. So if you do have any questions, please post those through to Sam. He'll get them over to me during the course of this session. I'll answer those. If I don't manage to, then I will get back to you on email. If anybody has any questions, and there have been a few of you have had questions over the last couple of days, and rightly so, please send them on to me. Always available to answer any issues or concerns that you may have. One of them was about hard stops, and I encourage you I encourage you always to have a hard stop in your own minds, and it varies between people. So I don't like putting a hard stop in necessarily myself, because I like to give the trade a chance and then pull the trigger when I need to. Unfortunately, I haven't been pulling the trigger hard enough or quick enough this week, So there's a question coming through there from Mark, and I'll revert back to that as soon as we trade this afternoon. So we'll get to looking at the Dow now. So we've traded up a little bit, trading there at 34,530. So we've been a little bit lower throughout the course of the day. I'm going to put a limit in here, just slightly above the market, hoping to catch that little bit extra as we do open. We have seen some weakness coming through. Obviously, there's been a fairly sharp rally off of the Evergrande story from last Monday, which was probably the start of my very volatile week. I think, again, with the weekend ahead of us, there could be a bit of profit taking. There's obviously been a decent amount of money made on the rally that we've seen come through since Monday. So just a sell order in there, slightly above the market. Not going to be too aggressive with anything. It's going to be a short-term trade, just looking for that 20-25 pips around the opening bell as those opening orders come in. Obviously, we bounced off of that low of about 34. I think I saw about 34,465 when I was watching the markets earlier. So that's about the low. So we're about 60 points off of that, considerably down from where we closed yesterday. The Evergrande story isn't over. I think it's going to be contained, but there are still going to be issues. I think as you may have worked out from my market comment this morning, I think it should be allowed to fail, and there will be some ramifications for that. Whether they're contained within Asia and specifically within China has yet to be seen. But we're fairly close to the opening bell now, so we'll just continue to monitor this. I'm just going to change this to a 1-minute chart just so that we can see. You can see there far more accurately the rally that we've seen in the last couple of minutes to the upside, and the levels that we were trading at earlier in the day. So 15 to 20 seconds or so before the bell rings, and then we'll just see if hopefully what I'm looking for is a jump up into the limit that I have there, and then a bit of a move lower. So we're open now. Unfortunately, we've kicked a little bit lower initially, nothing too spectacular. Trading there 34,530. Probably one of the more sanguine opening bells that we've seen this week. Probably an indication that there isn't any huge momentum with any direction that we're seeing at this point. I'm just going to open up gold, just have a look at what gold is doing. Gold's around 1743. So again, the markets aren't moving hugely. The DAX is still quite well bid at just above the 15,500 mark. I did sell just a little bit higher than this morning on the DAX, as I said, keeping the trades really to a minimum. Gravitating up a little bit towards so we're close now on the sell limit on Dow. I was going to say that we're moving a little bit, and there we go. We've traded on the Dow, so we're in there at 34,549. I'll continue to monitor that for the next little bit. As I said, not looking to take too much out of that particular market. If it starts to fall down, if we see 20 to 25 pips. So we've got all of the opening orders coming through at the moment, matching up. And like I said, the key area that I'm looking at is that first 7 or 8 minutes worth of trading, see whether we do have any momentum picking up. And there's a little bit of a buy-in bias at the moment as we trade back up towards 34,575. So just going to leave that for a few minutes. We'll talk about things in more general detail. There is a question there about gold, and one of the questions there is that, or the question that Mark is asking is, why is the is the call for gold to move so much lower. One of the reasons is with the Fed pinpointing a rise in interest rates earlier than previously expected. So the first interest rate probably hike coming towards the end of 2022 as opposed to the beginning of 2023. The dollar has strengthened a little bit against major currencies, and obviously gold becomes less interesting from a risk appetite perspective when you can start to see some return on or more return on treasuries and potential deposits in banks and things like that. We're operating in a zero interest environment at the moment, where people are actively looking for sources of investment. Whereas when interest rates start to increase, you return to a more traditional framework where people might look more at treasury bonds for a more stable return or a safer return, or possibly even look to deposit currencies in banks as well. So with the interest rate perceived or expected to increase or rise over the next short period in the US, people may, or investors may decide that rather than invest in the more risky assets such as the equity markets and potentially gold, that they want to make more or less risky investment decisions around either currency deposits or treasuries. So we're seeing the Dow pick up a little bit, back up towards 34,600. Probably the same sort of levels that we closed off. So I'm not going to be surprised if we get up to the levels that we saw at the closing bell yesterday and then see a retreat back from those levels. But we'll just continue to monitor that over the next period. The one that I'm looking at, hopefully from a trade perspective, is gold ticking up closer towards that 1745 level, so that I can get back into the gold market with an eye on a move lower from these levels, and fairly close there to we were fairly close there to my gold trade, my gold limit being triggered. I'm going to continue to monitor the Dow. It's up a little bit higher. Potentially look to stop myself out on that if we don't see a movement lower from these levels. Probably stop myself out a bit more aggressively than I normally would on the back of the week that I've had. The last couple of larger trades have kind of made things a bit more palatable this morning or today. Just looking at the trades for the week, there unfortunately is the damage. Wednesday and Thursday being the real significant damaging days. There's a couple of trades to update on here, which I'll do over the next period, and we'll get these out to you later today. The number of losing trades isn't particularly high, and going back to a comment that Mark made earlier in relation to hard stops, if you had harder stops in there, you could potentially have halved that loss. Obviously, as I've mentioned before, the period before it has insulated me well against the loss this particular week, but nobody likes making a loss, least of all me. And so you can the graphical representation of the over trading throughout the course of the week, which has led to some of the bad behaviours that we saw both on Wednesday and Thursday, will be addressed, and it will be back down to an 8 to 10 trade limit per day, and hopefully a return to this type of trading that we saw over the previous weeks. So I think I've answered the question there about gold. It's not necessarily a consensus. It's more an opinion from some of the people that I would be inclined to follow. They are usually quite successful. And my own opinion would be that gold is headed lower. I think we're going to be moving away from a zero interest rate environment, and there are going to be more assets at people's disposal. Likewise, I think it impacts on the stock market over the long term. The Chinese Evergrande story, I think, still has a way to run. And needs to be monitored. And I think if we see, as I would forecast, a period of stagnation in China, it wouldn't be unlike what we saw in Japan over the last 20 to 25 years, where there was very very little GDP growth, and China is going to be falling off a cliff in terms of the GDP numbers that we've seen over the last 4 or 5 decades, where 10% used to be the norm, came down to 8%. It's been down to slightly below that number over the last couple of years, but potentially it goes to 1 or 2% over the next couple of years. And I think as a huge consumer of everything that goes on around the globe, I think that does have consequences for global markets. And as we see numbers that continue to show an economic slowdown in China, that's going to start to unnerve markets wider afield as well. I'm still in the Dow trade, probably looking at a stop if we see the market a little bit higher, up to maybe 34,650. I'll continue to monitor that during the afternoon. Please email me, nick@bullandbearcat.com, if you have any questions, and I will get back to you over the remainder of this afternoon and over the course of the weekend to answer those questions. Thank you very much for joining me today, and I will be back refreshed on Monday and hopefully trading in a more orderly fashion. Thank you.